Hello, it's Kim. In an effort to tell the whole truth about all things financial, when we look at life insurance and we remember one simple sentence, it enables us to see much easier what's actually going on. And that sentence is, there are no deals in the life insurance industry. In fact, really, there's no deals in the insurance industry in any form. Everything is a trade-off between price and risk. And so what you see on the screen here are 4 different illustrations of a same type of policy, but structured different ways. And what many people in the YouTube community like to talk about is either some form of term rider or high early cash value product being used to minimize commissions and thereby increase the cash value. And it's only part of the story, especially when you look long term. And as most people are well aware, life insurance is an extremely long-term product. In fact, it's the only product that I know that you could literally have bought for you at age 0 and use the rest of your life in a guaranteed fashion. And so what we want to look at here on the screen is that the typical approach with the high early cash value, note the rate of return, I'll explain it here in a minute, versus the term rider cash value versus the maximum paid up addition cash value versus an all base policy cash value, total rate of return is a lot different than what you think. So this sentence, there are no deals in the life insurance industry, is attributed to Norman Baker. And I also want to point out something that my husband, Todd Langford, speaks of, and that is the creator of the Truth Concepts calculators that you're seeing here. And that is that it is a lot easier to tell a lie in one sentence. It takes a full paragraph to tell the truth. So this is your paragraph. So when I say total return, what I mean is that is including the taxes and the term insurance that are not a part of whole life. And yet term insurance as a rider is often added in. And even down here on this base policy, which as you can see has the best total return, that is not an internal rate of return number. That is an equivalent return number or a total return number. Meaning when you evaluate the product and you have to add in taxes, even though you don't get taxed on the growth of the cash value, you have to add them in because if you cancel the product, then you are taxed. And you have to add in the cost of the term insurance because that is the only way to reflect the value of the death benefit. If you don't add that in, it is inaccurate. Now, I can use these calculators to do an internal rate of return number. You're going to see the same cascading information. In other words, the base policy, and I know this is a surprise to people, the base policy actually has a higher total rate of return, and it actually has a higher internal rate of return, especially when measured over 30 years. And if this is a product that you're going to own for your entire life, 30 years is actually probably a short time frame, but it's a good substantial amount of time. You don't want to be measuring something like this over 10 years. And frankly, it's not super reasonable to measure it over 100 either. So 30 is a good spot in the middle. So again, just pointing this out, the base cash value product is a 7.49 total rate of return, adding in the taxes and the term insurance costs. If we add in the maximum paid up addition, which everybody loves to do, me included, I do that on a lot of my policies, then you are at 6.69. If you add the term rider, you're at 6.58 because that term rider has costs. While yes, the dollar figure of cash might be higher, you've put more in, and so you have to equate that. And then here, this high early cash value is 6.48. Well, why is it the lowest? Because there is a trade-off. If you're going to have high early cash value in the early years, you're going to have a lower rate of return in the longer years because there are no deals in the life insurance industry. I hope this has been helpful. Please check out truthconcepts.com if you're interested. Anybody can download these calculators for free for 30 days. And of course, at Prosperity Thinkers, we're here to help answer all of your questions about all things financial particularly the use of whole life insurance as your emergency opportunity fund, combined with the human life value elements of what life insurance is supposed to do. And that's insure you, your greatest asset.